2024 began with a bitter pill for contract development and manufacturing organizations, or CDMO players. A muted biotech funding environment dampened the pace of early-stage projects, leaving these biotech firms feeling the heat in 2024. But here's the good news. Positive triggers are emerging on the horizon, and there are clear green shoots that are visible and indicating a turnaround for the sector. The first one is an uptick in biotech funding, signaling a recovery expected in CDMO players. Demand for CDMO services in late stage as well as commercial molecules is also on the rise. Moving on to the third one, we have broad-based commercial contracts in biologics and small molecules that is picking up pace, as well as biologic CDMO demand that has remained robust, and we are expecting the good growth to continue going forward. Nutraceutical manufacturing demand that is also recovering quite steadily, and now we will shift focus and talk about what the highlight and commentary is coming in from the CDMO players. That's a key one, because what they're signaling is that maybe in the near term, there could be some mixed near-term challenges that we're watching out for, but a promising outlook that is coming in for the medium term. Piramal Pharma is expecting to see early teens growth as the CDMO segment is outpacing the company's average growth. Divi's Lab, they remain quite confident in terms of a double-digit growth in terms of revenue. We have Syngene, Laurus as well as Newland Labs. Now their commentary is quite similar, because what Syngene is saying that they're expecting high single-digit growth in FY25, but FY26 expected to be stronger. Similarly for Laurus Labs, expecting a soft growth in FY25, but a good growth from FY26 and onwards. And Newland Labs also flat growth in FY25, but targeting a 20% CAGR growth in the medium term. Now let's look ahead. The industry is poised for an acceleration in terms of top-line growth. Currently somewhere at 9%. By FY27, 16% growth is what one is watching out for. However, valuations, that's the key concern coming in here, because valuations currently are ranging somewhere between 47 times to 60 times for these players. Following the surge that we've seen coming in on a YTD basis in terms of a stock performance, that was somewhere between 40% to 80% in the run-up that we're seeing, which is outpacing the Nifty Pharma's 34% rise that we saw this year, approximately on that front. Now, finally, here's what investors and analysts need to keep an eye out on. One is the progress in terms of the Biosecure Act, when it's going to be picked up in the US Senate. Moving on to the next one, we have seen sustained recovery in biotech funding. Will that continue in 2025? That's going to be a key factor. Uptick in RFQ surely is there, but are they translating into confirmed orders? Keep an eye on that, as well as company-specific new launches. What is the trajectory that they have for price erosion in generic APIs is something that is very important for CDMO players. The CDMO sector is navigating a complex landscape of challenges and opportunities that they're seeing. While there are signs of recovery that is quite evident, sustained momentum will be a hinge on factors like funding, legislative support, as well as execution capabilities of these key players. However, could these stretched valuations limit the sector's ability to deliver significant gains in 2025? Let's watch out for that.
Thank you for watching CNBC TV 18, and do follow us on all our social media platforms for news, updates and more.